Welcome back to Mid-Cap Radar. Well, have a look at the Nifty within touching distance of the 26,000 levels, 15 points away as far as the spot prices are concerned. Just a while ago, it was just around 5 points again. That'll be a key monitorable, especially given the kind of call writing we've seen at the 26,000 levels. But moving on, Carraro India reported a mixed set of Q2 numbers. Revenue growth came in healthy, but higher raw material costs dragged margins lower. We are now joined by Balaji Gopalan, who is the Managing Director at Carraro India, to discuss on Q2 as well as the way forward. Thank you so much, Mr. Gopalan, for joining us. Well, that is going to be the key question for us. Strong revenue growth indicating strong volumes, realizations as well as cost dragged the margin performance. Last time when you joined us, you said you would be targeting an FY26 exit margins in excess of 11%. Do you stick to that target?
Yeah, hi, good morning. Thank you very much for giving this opportunity again. Yes, as you rightly said, revenues have been very encouraging. The absolute EBITDA numbers have grown and our PAT is up by 22% compared to the previous year. Now, what does this indicate to us? It indicates that the segment in which we are present, the products that we are giving with a technology stack up, that is being accepted by the customers, final customers, and obviously because of that, the OEMs are very happy to pick up more from us. The four-wheel drive has been the key factor that has come in the domestic area where we did reasonably well. And in the exports, the teleboom handler business came in to our expectations. If you remember, these are new products. These are not based on market growth or it is not organic growth. These are new businesses captured by Carraro and the ramp up is happening. In four-wheel drive, the problem has been that the absorption has been much faster, although it's very good for us. It is much faster ramp up than what we thought. The technology absorption, we were expecting it to be around 20%, 21%, but unconfirmed sources, we have come to know that it is crossing around 24, 25% of the total tractor industry. So this phenomenal growth that came in this quarter hit us a little bit because the raw material logistics, the supply chain, the localizations that were planned was all considering a more normal ramp up and not such a steep ramp up. So we lost out because of that and we had to cater to the market. We had to feed the OEMs. So we did go down on our savings in terms of localizations and other actions. But we will surely recover because the future, the volumes are the most critical in an organization like ours. The fact that the technology of Carraro transmissions and axles is being accepted, that is a big relief for us. These are not structural issues that we are having with marginality. The issues are more about validations, localizations. Now we are focusing on spare parts because we have high margin over there. We are introducing special campaigns for spare parts. We have introduced 2 new service providers and 1...
Sure, Mr. Gopalan, that point is taken, but due to the paucity of time, we just want to get more questions in and more information for our viewers. So if you could just narrow down in terms of what these volumes are in terms of the guidance that you're providing the market at this point in time, because you said that's a critical component in a business such as yours. And what is the realizations going forward, considering that it was impacted this quarter because of the mix?
Yeah, see, in terms of the volumes, we are very confident on the guidance that we have given. Today, it is on the higher side. What was told realistic as 215 million euro and an optimistic 220 million. Today, we are revising it and we feel 220 itself is realistic and we may even go further higher than that. So that is as far as the volumes are concerned. In terms of marginality, we have the next 6 months to work on these validations and look at the product mix that will come up in the next 6 months. So we are not very highly disturbed or worried about the marginality. The guidance we gave for this financial year is 11%. And we are quite sure that we will come close to it. If not 11, probably 10.8, 10.9, but the direction will be there. And as we move further, surely we'll catch up on the revenue. So, for the marginality. And next financial year, the guidance given is 12%. I think by then we will stabilize on our profitability as well and ensure that we are meeting the market expectations.
Mr. Gopalan, the other worry that the market had was the non-tractor emission norms that are now being pushed beyond FY27. Now, given the fact that the four-wheel drive or the 4WD, as you call it, hinges on this, and also given the fact that now 4WD as well as 2WD pricing is almost at par, do you see this particular story playing out as earlier anticipated, or do you feel it could be pushed out to a little later?
No, see, the emission norms have directly nothing to do with Carraro.
Right.
We are into gearbox and axle, so they don't affect us. It is an indirect benefit we will get because when you go for the higher Euro norms, the domestic OEMs have the opportunity to access developed countries with regulations in emissions. So they get the higher market scope to penetrate. For Carraro, it could be an advantage because they'll have to pull the transmissions from us. But per se for us, that is not a very big concern. We are going steady with the kind of growth plans we have had. Just to share, 6 prototypes have been made this year. Last year, out of the prototypes made, 3 have been productionized this year. So this kind of new business, new products, new segments is what growing Carraro. And that is why we are strong. What comes as organic growth is something which will be beyond what we are now projecting. So we are quite safe as far as our growth numbers are concerned.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Carraro India. The stock is up around 2% at this point in time. Well, for the markets, it's speeding ahead. We're at the 26,000 mark, or just about a few points away from that. So just going from strength to strength currently for the Nifty at this point. And we have the Sensex, which is also speeding ahead with a gain of around 300 odd points plus. So overall, speeding ahead in terms of all of the indices at this point. The advanced decline ratio as of now just about even keel for at least on the Bombay Stock Exchange. On the National Stock Exchange, it is advancing as compared to the declines. So let's see whether that crisscross does happen in favor of the advances soon on BSE. But as of now, looking great for the markets as we speak. Take a break, be back with more. We'll get you a CNBC-TV18 exclusive conversation with CLSA's Life Eskison to decode their India strategy. Stay tuned.